The word debt has acquired a negative reputation in recent years, but the truth is that not all debt is bad. In fact, some types of debt have the potential to be beneficial. Further, taking on good debt is one of the most effective methods to begin leveraging the power of your money and establish passive income sources that support the creation of true wealth. Fewer people would be able to afford a home or use their high incomes to begin creating their empires without debt. Hello folks, welcome back to the channel. With every video, I try to solve your problems, whether financial or daily struggles of life. And this video will help you understand that you can easily make money, even if you have debt on your shoulder. And the most exciting thing is that you can actually make money off of your debts. So, are you ready to take tips? There's a lot to cover, so let's get into it. Can debt help you build wealth? You can sometimes use debts to increase your fortune. For instance, most property buyers take on debt to acquire their house. The National Association of Realtors showed that 87% of recent buyers financed their house purchase in a poll conducted in 2021. Homeownership can often result in the creation of new wealth because property values tend to increase over time. According to Third Way, a national think tank, many students borrow money to pay for college, and most college programs give students a financial return on their investment in education. Taking on debt to earn a bachelor's degree or higher can eventually help you accumulate money. Understanding the various debt types. Consumers can assess if it makes sense to borrow additional funds by better understanding the various types of debt. Several criteria determine whether a debt is good or bad, and some loans can be categorized as efficient or inefficient. As was already discussed, borrowing money can be advantageous if it is put to good use to increase your wealth. For instance, a home loan to buy a property might be a beneficial and effective form of debt. Home loans are a solid and effective debt since the residential property has a propensity to increase in value over time. In contrast, bad debt is when you borrow money under conditions that strain your finances. Borrowing money and finding it difficult to make payments is a bad kind of debt that could keep you mired in an endless cycle of debt. While mortgages might be unpleasant if you can't afford the loan's monthly installments, home loans are typically beneficial and effective. Because cars tend to lose value over time, but might still be useful for commuting, auto loans can be both advantageous and inefficient. A U.S. Census Bureau report published in April 2021 showed that most American workers commuted alone to work before the COVID-19 epidemic. While taking out a loan to purchase a deteriorating asset is inefficient debt, doing so to buy an appreciable asset is efficient debt. Depending on your debt tolerance, these debts may or may not be beneficial. Effective and ineffective loans, for instance, are good if they help you increase your wealth, and bad if their financial load is too much for you to bear. Purchase a family house or rental property with loans. A home is a possession you can look after, enhance, and bequeath to your kids after you pass away. You can use second properties, such as an apartment you rent, to get extra money. Most people want to own property, yet very few of us can afford a home outright. Most people buy houses using a home loan from a bank or a bond originator like UBA. Home loans often have terms of 20 to 30 years, making the monthly payments manageable. Additionally, loan rates are reasonable, typically 1 or 2 percentage points above or below prime. Debt can be used to pay for schooling. Whether it's a 3-month course or a 3-year university degree, developing your abilities gives you the chance to land a job, or if you're already working, to advance your career and earn more money. You can start your own business or use your abilities in your chosen job. To make a second income, you could also use your abilities to start a side business after work. Education costs money. To help you pay for quality education, banks and other organizations, including corporations and the government, offer student loans. Student loans often have low interest rates, and repayment of the loan amount is postponed until you qualify, just like mortgages. To start a business, use debt. You have a fantastic company concept, but need money for supplies and a location. Or do you wish to invest in a franchise in a desirable area? Many businesses need more money than you have in your bank account or savings account to start, even though some only need a few $100,000. Loans are available from banks, financial institutions like Lululend, and government agencies like the IDC and SEDA for those looking to launch, acquire, or expand a business. There will be some red tape involved in the application process, but if you do your research and create a strong business plan, you may be able to get a loan at a very cheap interest rate. You will not only be building your generational wealth into a priceless legacy that you can give future generations by expanding your business and repaying the loan in a few years, but you will also be an example to others. Additionally, hiring personnel will boost the economy by assisting others in finding work and increasing their wealth. Home renovations. You can finance home improvements with the help of personal loans. Owning a home makes you wealthy. Making improvements to your property with a loan where no security is required can increase its value and possibly enable you to sell it for more money. Home reselling. As was already said, investors can purchase residential property using hard money personal loans and flip it swiftly for a profit. Although this house flipping approach is dangerous, if investors are skilled at it, it can help them accumulate riches. Cash flow planning. Building wealth involves using cash flow management to monitor your revenue and prevent missing payments. You can use cash flow management to make loan payments early or get closer to financial freedom. Consolidating debt. Debt consolidation is one of the causes you could use to apply for a personal loan. For instance, consumers with significant credit card revolving balances may combine their debts and replace them with a personal loan that is more manageable. Lowering interest costs can assist you in increasing your wealth. Be debt smart. According to the One Life Generational Wealth Survey, 37% of South Africans produce generational wealth by completing their university degree, 25% by buying property, and 24% by establishing or running a business. In most cases, these responders would have used good debt to finance their aspirations for themselves and their families. And you can too. So now that you know how to use debt to enhance wealth, get prepared. You don't have to do everything at once or in haste. Take your time, plan, know exactly how you will use debt to develop generational wealth, and always make sure you can afford the repayments on whatever loan you take. It's not always a bad idea to get into debt. You can increase your net worth by using borrowing as an investment strategy to help achieve your goals. Credit access may allow you to prosper and acquire financial independence. Given the degree of risk involved with a debt-based investment strategy, it's critical to consider whether this strategy is appropriate for you. It is strongly advised that you speak with a professional, such as a financial consultant. Regardless of how efficient the debt is, it's crucial to avoid taking on more than you can comfortably afford to pay back. Taking on debt carries risk, but effective debt can help you accumulate wealth over time if it is appropriately managed. That is it for the video. I hope you liked and enjoyed the video. Please let me know by pressing the like button, and if you haven't done so, please subscribe to the channel and hit the bell icon for future notifications. Till then, take care of yourself, and I will see you guys in the next one.